Now on to commodities, and oil is shifting higher, benefiting from the Trump troubles and a drawdown in US inventories. Let's bring in Markus Helsing from JB Markets for more. He's in our Melbourne studio. Markus, thanks very much for joining us. Now, this crude oil, what's happening with it and what will actually cause it to sort of move and break into some significant price action either way?
Well, thanks for having me on the show. Look, again, as we all know, there's a big supply story which has been trumpeted now for the last 2.5 years and been dominating the whole crude oil and energy sector now for quite a long time. Now, time is a beautiful thing, and time, in case of energy, obviously does, at the end of the day, go in favor of the supplier long term. Long term can be years, and so far we have 2-3 years of turmoil in the oil markets. We're currently trading at the sort of $42 to $55 West Texas Intermediate dollar a barrel level, which is a broad $13 range for the last 8, 9, 10 months. Look, really, the US dollar is one impact that we think will have a positive underlying support of oil. But looking at oil itself, really, it's a continuation of OPEC sticking to their production cuts. That gives you this sort of underlying base, which is helpful. But really, to see major breaks, we do really need to see a major change in the demand story, and that at this point in time we can't see yet. It's more a way of seeing the demand story slowly veer into and balance out the S&D levels, and that we think will happen at some point over the next 6 months. So we expect at some point a major surprise on the upside that has major factors to it, but in a moment it is steady as she goes, and it's range trading.
All right, so range trading, but are you saying, what do you think will happen to the demand?
Well, I mean, it's obviously you have your demographics at work, namely in Asia, of course, and even in the US, of course. And I mean, we're all talking about electric cars and whatnot, and alternative energy source and all that, and that's all on its way. But at this point, our reliance on fossil fuel is undisputed in the immediate term and the next few years. So at some point, it just needs 1 or 2 shocks here or there on the supply side, combined with an ongoing rising net demand, which is obviously still the case, and all of a sudden you got a change in price patterns. And we think at some point the next 6 months we're up for some surprise.
Yeah, OK, well, let's talk about the US dollar. Now, the index, does it appear weak?
The US dollar had a tremendous, yes it does, the US dollar had a tremendous story since before actually the Trump election itself. It's in a multi-year bull market. We actually called a bit of a top a couple months ago, which we so far have been proven to be more or less on target. But more importantly really is that the overall story of euro weakness has gone away. We have generally a broader pattern of currency that basically strengthen it on their own merits. Economies such as Mexico, for example, don't do so poorly. And that's an important currency on the US dollar index basket, for example. Same with Canada. But really the euro, to me, has been a major impact. And now looking at the US dollar itself, what's impacting the US dollar? Obviously the Trump saga, but also there has been a lot of good news built in. And quite frankly, we know the US government wants a weaker US dollar, so they won't be in the way of a US dollar falling. So to us, technically and fundamentally, the US dollar looks as though we could see a decent dump to the tune of 10% or more.
All right, now just very briefly, Markus, iron ore prices, where are you seeing them?
Well, we're talking about it for many years, and I mean the interesting part was really the backwardation or the forward pricing versus spot pricing in iron ore, where we saw mainly a backwardation of forward prices trading at up to $20 discount to the spot price up till about 3 months ago. That has quite literally collapsed, with iron ore coming off the $90 high levels in January now to more reasonable levels in the mid to high 50s per ton. So the backwardation has collapsed to levels of $5, $6 1 year out. Now that's telling us the market is getting a lot more fairly priced. So in terms of where we are at now, purely from that price behavior, it's telling us a hell of a lot what's going on in the market.
All right.
So we think we might be range bound between the sort of $48 to $60 price level over the next 6 months, and we have probably some good base support where we are at right now.
All right, Markus Helsing from JB Markets. Appreciate it. Thank you.
Thank you.